Good Tuesday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from Philadelphia, Dimitri Pagamonik. How you doing, D?
Good morning, Will. How are you?
Great. So what are we going on today? You want to do the disclaimer first?
Yeah. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker dealer. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And let me share my screen. If anyone there is joining us for the first time and you have a question, you could put those questions on the live chat on YouTube. Will's watching those questions. He'll read them back to me. If you want to come on a show and ask your question live and direct, we also provide a link to Zoom. Click on that link. Once you click on the link, it'll take you over to Zoom. When you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody will be able to hear you, and then you could ask your question, guide us to what you're looking at. And it could be questions, strategies, Market Chameleon tools, data analytics. Maybe you want to share something that you've seen that's unusual. You're welcome to come on the show. I think that will benefit everyone. While we're waiting for questions to queue up, what I'll do is we'll take a look at the pre-market report, see what's trading in pre-market hours. I might navigate to a couple other reports regarding options, give you guys some insights. I'll take a look at some questions maybe left over from last week, or I've been getting an email, go over some of those. But of course, if any questions come in, I'm going to take those first. Sound good, Will?
Perfect.
Pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Here I see 121 stocks made our percentage gainers list, 20 on the decliners. So from this perspective, right now we're looking like a more bullish bias at the open. Let's filter down this list to only S&P 500 companies. So we want to take out small cap stocks, ETFs, leverage products, preferred stocks, rights, units, all those. Let's remove them from the list so we could just concentrate on S&P 500 stocks. And I'm going to use the filters here above. This one in ETF. What this allows me to do is select from a list of ETFs. When you click on one of these ETFs, the list below will get filtered by stocks that are holdings in that ETF. So the first one, SPY, that's the S&P 500 ETF. Let's click on that. And then you'll see that the list below got filtered by stocks that are in the SPY ETF, which are the S&P 500 constituents. And here we see 15 stocks made our percentage gainers list, one on the decliners. Again, from this perspective, we're looking like a more bullish bias at the open. Let me see, to save some time, if you don't have questions, Will, I might cover a question from last week, a leftover question, and then move on to a couple of reports to get some insights from those.
Perfect.
All right. I think last week somebody asked about short interest. Is that correct? Well, I think I said I was going to cover that right before the end of the day. So we didn't have time, and we'll talk a little bit about short interest. I think the question was, do you remember to add the short interest, like maybe even to this report, the pre-market report?
Yeah, they were asking. Rob just popped in a question. Sorry about the delay. It is YouTube's a little delayed. He is asking, is there a way to get this type of report during trading hours? I'm assuming he's just asking about gain. Rob, are you just asking about the gainers, like the pre-market movers, just during the day?
Yeah, that's a good question. And yes, under stocks, we have here pre-market trading, after hours, and these market movers. Maybe I should rename them regular hours trading. But this is the same report, but it's showing the stock movements already after the opening, right? So now it's following not just the pre-market trading. It's saying, okay, how are these stocks performing from previous day and today? So you could see the percentage changes. And again, same filter, S&P. This report is from yesterday, of course, because we're not open yet. And this is as of yesterday's close, but same type of report, but during the day.
Perfect.
Yep. Okay, I guess then let's talk about the short interest data. And a lot of people, I think when they're seeing it on different websites, there's short interest in this stock, short interest in that stock. And first, let's discuss what they're seeing. Okay, what does the data actually represent that you're seeing on these websites? Where is it coming from? What does it mean? And then, what can we do to look at the markets and really, I think the question was really trying to get an indicator where there are short positions being built up on the stock itself, right? Because what is the aim? To see if there are big short positions being built up in the stock that are betting that the stock will go down in a negative way, because I think that's the goal. And I'm going to show you that the short interest is not actually telling you that. All right. So let's first talk about where this short interest is coming from, right? Where's this number coming from? Is this live? Is it being reported on the consolidated tape? Is it coming from broker dealers? And it's none of that. Okay, that's not where it's coming from. The NASDAQ here's what you're seeing. Okay, here's a short interest report. They give you an overall. Here's a press release. They give you an overall summary of it, and then you could go and buy this data, and websites buy this data. Then they put it on their website, and look, a lot of it will draw in an audience, right? What happens is, if you guys are, maybe a lot of you never ran a website, but the way the website works is that these are keywords that will draw in people to your website. Okay, so a lot of it is used for those purposes, but when we add, and people ask, well, do you add this data? And when we look at data, we have to evaluate it for a few different perspectives. That there's a cost to adding the data because you have to license, you have to pay. NASDAQ sells this data. Is the data going to be valuable? Right? Are we adding value to our customers? Or is it available for free in other places? Because it's already available for free in other places and you could just look at it, there might not be any value for us to add it, because if there's a cost to add in it, we're better off using that capital to bring in other data that is not easily available, right? So why not use the same amount of money to bring in data that you can't find anywhere else, because that's an actual added value. But let's take a look at this short interest, because I do get questions about it. Where's this? I want to see the short interest. So first, let's see, what is the source? The source is NASDAQ. Okay, NASDAQ sells this feed. And by the way, NASDAQ has a lot of good feeds. I don't want to say anything bad about that. They have a lot of valuable feeds. We look at them, we even talk to them. But I'm looking at this one in particular, the short interest feed. And you could see here, look, here's when their short interest data came out, right? This is when it was made available. So if you subscribe to it, November 25th, they issue press wire, at the end of day settlement, November 15th, short interest was this. So you're looking 10 days, right? 10 days later, what the short interest was 10 days ago. Okay, that's what you're looking at. And it's a one-time snapshot. So November 26th, you're still looking at this date. November 27th, you're still looking at this. November 28th, you're still looking at this. It only gets released twice a month. Okay. And when it does get released, it's already a delayed. It's not a real-time short interest short interest report. It's a delayed report anyway. And then you could see they compare it to the previous one, right? So from November 15th, the one that was previous is October 31st. So that's what you're getting. You're looking at a snapshot in 2 days out of the month. Okay, that's what so to put in perspective, it's like analyzing a stock volume, right? Imagine analyzing a stock volume, but you're only getting 2 data points in during the month, right? Just 2 data points. It could be end of day, 2 data points at the end of the month, and that's how you're trying to analyze your volume. Okay, so I'm not sure how valuable that is because, that's really not enough information, right? You're not looking at intraday. You're not looking at the next day. You're not looking at how it changed from before expiration to end of expiration. You're looking at 2 data points in an entire month, and these are changing all the time. So I'm not sure how much weight you want to put on that, number one, because by the time you're looking at it, this, November 25th, it's like trying to analyze the volume today by only seeing the volume from 10 days ago. All right. And so you're analyzing stock prices today, but you're looking at the volume from 10 days ago. I'm not sure how you correlate that. It could be, it's very hard to understand how to put value on that. Another thing, when we talk about short interest, right? What is short interest? A lot of short interest, a lot of borrowing stock and then selling that stock in the market is not, and I would say maybe even most today, I think most of the time when somebody is borrowing stock and then selling it in the market is being used by professional traders to hedge off a position and not necessarily take a short outlook on the stock. Okay, so I'll give you an example. A lot of people out there who own stock buy right, right? So when you buy right a stock, what you're doing is you're selling a call option to a, let's say, broker dealer, right? Whoever it is, broker dealer, Goldman Sachs, Citadel, they buy that option from you. And now that option's on their book. Well, when they have that option on their book, if they do nothing, it creates long exposure, right? It's a delta. What it's saying is, okay, if I do nothing and I just hold that call, I need the stock to go up. I need the call to go up, because if the stock goes down, I'm going to lose on that call option. And they have what's called a delta. And to offset that delta, to be neutral, they need to borrow stock and sell short that stock to neutralize their directional risk. Okay. So, and that is changing from day to day. It could be changing. It could change from today to tomorrow, right? Because of the way the options are trading. And it doesn't necessarily have to be just options. There are other derivatives in the marketplaces that require you to perhaps sell short to offset your long position. So it's really a balanced position, not somebody necessarily that will have to cover. Because if you're long a call, think of it this way: if you're long a call and you're delta neutral, you have a gamma. If the stock goes up, you don't have to cover. You actually have to sell more stock. You're actually going to have to short even more stock as the stock goes up. Okay, so all that, if that is the indicator you're using, then you're using a very bad indicator, because it's not telling you that, right? You're not seeing that within this data. Okay, this is just giving you a number at one point in time, and this data is changing constantly throughout the day. So think of it as like you're getting 2 data points when this thing is changing throughout the day, every day, throughout the month. So how do you apply it? I wouldn't even know. The data is available there for free, but personally, I wouldn't know how to even create value from that data, because it's not really an indicator of what you think it's indicating. All right. Are there any questions with that?
We did have a few questions.
Okay.
Well, Alex made a comment. He said, Dima, sometimes my broker shows hard to borrow on the broker's platform. From that, I already know stock is heavily shorted and susceptible to a short squeeze.
Right.
Robert was asking, is there a reason they use this type of report instead of real time? Is it available real time, or is it only available, I guess, 2 times a month?
Right. Well, this report here, that it comes out twice a month. Okay, so this is NASDAQ's report comes out twice a month. And it's hard to stitch that data together to anything in real time. So it would be hard to say, like, here's a short position, at this moment in November, 15th, when you're looking at, open interest in options on November 25th. So how do you stitch it together? There's really no, you can't do it. There's nothing there that is enough information. They're too far apart. They're too delayed. You don't know what you're actually looking at. You're just looking at, a data point in time. So that's why, this short interest, we don't go out there and buy, because there's a fee to purchase it. There's a maintenance, because we have to maintain the feed and create visuals and stuff. And it's not like we're not doing it because we're trying to be cheap about it. We're just doing it because we're saying, okay, that same capital that we could use to go and bring in different data sets, to you guys that are not easily available, like maybe like it's, company events, upcoming company events that are harder to get, that you have to pay a lot of money for, or, we go in and look at the TIG data, or, other data sets, FDA, PDFA, all these data sets that are harder to find, harder to get, it much more expensive. Those are the things that we try to bring in. So that's why really, certain data sets you have to make a decision, how do you apply the capital? But then I think who said that about the hard to borrow? Alex?
That was Alex, yeah.
Okay, right. So that's a more real-time indicator, right? That's a little bit of a bit more in, and there are other indicators we could look at to see, are there, actual short positions being established, and one of the things is it's hard to borrow. If a stock itself is difficult to find to borrow, right? So before you short it, you have to find a broker dealer willing to lend you the stock, and then if you could borrow the stock, then you could sell, right? And if it's difficult to find somebody to lend it to you, that could be one indicator that, hey, there's a big demand to short this stock, and it's hard to find anybody to lend it to you because it's all lent out, and then there's a fee involved. Okay. Now, sometimes it could be just your broker also finding it difficult to borrow. Maybe your broker's finding it difficult to borrow, but other brokers have plenty. That situation could exist too, because, this whole stock loan department's it's very gray. It's not like the stock market, it's inner dealer things going on. One place we could look at, well, I'll show you two places. We have 10 minutes. One is the threshold list. And a threshold list here, this is reported where stocks that are facing a fail to deliver situation where they might have to cover. Okay. So a broker dealer, if they lend out stock, they need to their customers, they have a locate. They need to find who they're borrowing it from. Okay. And they have a little bit of a grace period, but if they continuously fail to locate, then they're going to have to cover and buy back that stock. All right. So you do have a requirement that, hey, you're a broker dealer, you're lending out the stock, but you have to show where you borrowed the stock from, a locate. And there's a little bit of a grace period, but if they continuously fail, they're going to have to cover that stock. And that's what this threshold list is. It's showing up here. You could read about it. Stocks that are failing to deliver. And you could see a lot of times it's stocks with small float, right? Shares outstanding, small amount of shares outstanding. So even a small short position can create this situation because there's no stock to borrow, right? There's not a lot of stock to borrow here. Here's one in MSTR. And this, also could be being caused by broker dealers shorting. But why are broker dealers shorting, right? Now, broker dealers could be shorting because people are buy writing. And that's not necessarily when people buy write, they're not necessarily having a bearish outlook on the stock, that they're doing it because they want to get more yield for the stock that they have. But if we're seeing big open interest in the puts, downside puts with implied volatility going up in this, then it could already indicate, well, people are not, if people are buying up puts, and creating big open interest, that's more of an indicator they think that the stock bets that the stock is going to fall, especially if you're paying more and more premium for them and the open interest is increasing. So that could be one indicator, right? We could also look at the hard to borrow rates in the synthetic market. And that's, hold on, screeners over here. And we talked about the synthetic market last week. And the synthetic market is reflecting a hard to borrow rate. And what this is telling us is here's AMC, okay? And in AMC, March 17th expiration, if we look at the money, or I'm sorry, here are different strikes. So there are different strikes. So it's showing us, if you look at the 26th strike and you create a synthetic long, buying the call, selling the put, that's a synthetic long, right? Well, if you're doing that on the markets and you're getting a discount to the spot rate, that means that somebody is willing to pay you so they could get short. They're willing to say, okay, the stock is $7.34, but I need to sell it. So I'm willing to sell synthetically the stock to you for $7.12 for you to carry a long position to March 17th. Okay. So that's what they're doing. They're saying, if you're willing to synthetically carry this position to March 17th, I'm willing to sell you the stock at $7.12, even though it's at $7.34. And that's really somebody trying to establish a short position and willing to pay you to carry that position. All right. So that's another indicator right there that, hey, there are people out there actively looking to establish short positions. It's hard to establish a short position, and they're giving up a fee to do that. All right, so that's another indicator, and that's in real time. That's now. That's like something that's actionable. And if you believe if you believe that they're wrong, you're getting a discount. That's happening in real time, in the now, in the marketplace. All right, that's not something that's a data point from 2 weeks ago that's 2 weeks delayed. That's not what's happening, right? That's in the now. So I don't have enough time to get into the other questions that I had, Will. There's 4 minutes left. If you guys have no questions, I'm going to leave it at that.
Well, Rob had one question. It has to do with your dashboard. For those who are joining for the first time or haven't been told before, Dimitri's dashboard can be significantly different than everyone else's because he's testing a lot of potentially new theories. Some never make it into the Chameleon community, but and Rob was asking, I saw ETF inflow on Dimitri's screen. Is that a new feature?
Right. Oh, so right. So talking about data that we bring in, we do buy and license the data sets from different vendors and stuff. ETFs is one of them. So ETFs, I think, are very important. Getting the holdings, like we just did an example in a pre-market where we're filtering out stocks by holdings in an ETF. So these are data points that we do get. We do have inflows and outflows. I'm not sure if we actually pushed it out to you guys yet, because when we do get a data set from, who we believe is a trusted vendor, once we look at it, almost always, 100% of the time, we still find exceptions, because then we start analyzing the data ourselves. We don't always just render it. We start to, look at the history, look at the, look for any exceptions, look for, different types of metrics. And we usually always find something that we have to go back to the vendor and say, this doesn't make sense. Can you check it? Sometimes they explain it to us. Sometimes it is a bug that they have to fix. But, we do go through that process. And right now we are going through a process where we're looking at, inflows and outflows, and we still find certain bugs there that we have to report. Sometimes it has to do with just like, a missed corporate action or, split or something that needs to be adjusted for the inflows, outflows. I believe right now you may not be seeing the inflows, outflows. Okay, I have to check, but I know
he says Rob says he doesn't see it on his menu, so
it's not ready yet. And the reason is, and you see, we purchased the data, but even after we purchase and even after we're licensed and we're paying, we're still doing stuff to it before we could even bring it out to you guys. So we're still working on that. That means, that I know, we've been testing it and we're waiting. We have some queries in there and we're waiting for some responses and some fixes.
All right, perfect. Thanks so much, D. Awesome show as usual. Thanks for joining, everybody.
All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow. Oh, wait. Tomorrow we're at, right? Whoa, sorry.
I have an MRI with my daughter at 6 a.m. and you have an orthopedic appointment with your son.
Exactly. So we look at that MRI. So tomorrow, no show. Tomorrow morning, back on Thursday.
We'll see you on Thursday, everyone. Have a great trading day today and tomorrow. Great week. Thanks, D.
Thanks, everyone.